Everything you know about central bank digital currencies is wrong. China's digital yuan isn't just a currency, it's a weapon. While the West scrambles to launch its own digital dollars, Beijing has already embedded its system into billions of transactions. But here's the twist. These aren't cryptocurrencies. They're centralized, government-controlled, and designed to outmaneuver cash itself. Why? Because financial power isn't just about money anymore. It's about control. And the race isn't just between nations. It's between old-world banks and a future where money is code. This is why institutions win. Everything you think you know about money is about to collapse. Central banks aren't just printing cash. They're building digital vaults that let governments skip the banks entirely. This is why institutions win. Imagine a world where your savings don't sit in a bank's ledger, but straight into the central bank's hands. Zero-yield CBDCs? They're not a threat. They're a revolution. But here's the catch. Who gets to control that power? Gold hasn't been safe since 2008. When CBDCs replace cash, what happens to this safe haven myth? Real estate, art, all assets built on trust in banks now face a silent takeover. The market isn't just shifting, it's unraveling. And yet, the real battle isn't between gold and crypto. It's between decentralized finance and state-controlled digital money. Who'll write the next chapter of finance? The answer is buried in code or in a vault somewhere. This is why institutions win. Imagine your cash vanishing after 90 days or being blocked at a store, not by a thief, but by code. Central banks aren't just printing money anymore. They're writing software for economies. And guess who gets to decide which transactions expire, which wallets get slashed, and which sectors get a tax break overnight? The same hands that already control your data. But here's the twist. When money becomes a line of code, who's really paying the price? This is why institutions win. When you think bail-ins are a threat, remember, CBDCs let governments bypass banks entirely. No more depositors demanding their money back. Just a digital ledger rewriting balances overnight. But here's the twist. If your savings vanish without notice, who's holding the keys? Banks aren't just losing deposits, they're losing power. With CBDCs, you don't need a bank to lend money. You can borrow from the central bank itself. Suddenly, the entire system of credit creation unravels. But wait, if anyone can access unlimited liquidity, who decides how much cash flows into the economy? Convenience is a trap. CBDCs promise instant transactions, zero fees, total transparency. But transparency isn't free. Every purchase, every transfer, becomes a breadcrumb trail for surveillance. And when governments can track your money better than you do, who really controls the economy? The answer is buried in the code, and it's not you. You think you've got your finances locked down? Think again. Sovereign digital currencies aren't just for governments. They're a battlefield. Diversify like it's 2008, but smarter. Split your stash between stablecoins, crypto, and cash. But here's the catch. What happens when the algorithm decides your savings are too safe? Privacy isn't dead, but it's expensive. Tools like zero-knowledge proofs and encrypted wallets let you transact without leaving a trail. But ask yourself, who's really guarding your data? The same folks building the walls around your money? Traditional banks? They're not gone. They're just upgraded. Off-ramping from CBDCs means trusting a system that's already been hacked twice. On-ramping, a dance with regulators who'll call you a criminal if you blink. The real question? Who's watching the watchers?